Hello and welcome back to today's More Report on Monday the 16th of March with me, Rich Perry, market analyst at Handtech Markets. Moving on to euro dollar now, and the euro dollar it's interesting because I've been talking about these Fibonacci projections of the breakdown that gives us have given us downside targets, and there's been a slight consolidation around the 61.8% level around that 106.20 mark, and if you sort of project that downwards, you get the 100% level at around that 100.50 level. Now, what the theory would go is that if you start to trade clear of the fib level, then that should theoretically mean you're starting to break down and you should be moving towards the next fib level, which is that 100% level at 100.55. Now, today we've had this sharp move to the downside on Friday. Closed below 105 figure, not seen that since 2003, and we've now got potentially for a clear bar, well clear of the 106.20 level. So the move is obviously beginning to really be sort of quite decisive away from that 61.8% fib level. And it'll be interesting to see now if we get that trade below, because that suggests that this is on the hourly chart. Now that would suggest that today's trading is pretty important on the euro. We've got this downtrend intact. That downtrend has been in place on the euro for sorry, my chart is messing me around. That downtrend has been in place on the euro for a good couple of weeks now, or pretty much, and it's being tested as we speak from this little rebound. Euro's up about 40 pips. Now, obviously, if you look across the momentum indicators on the hourly chart as well, you're remaining in this negative bearish configuration. RSI consistently falling over around 60, MACD lines below neutral, and it's generally speaking very negative. But if you start to maybe trade clear of this downtrend and start to break it, then that is sort of a first rung on the ladder being stepped up for the bulls. But there's such an amount of work that they would need to put in to engage a proper rally of any substance whatsoever. But still, it would be interesting. But at the moment, I think this is just still being seen as another chance to sell this little rebound, similar to the one that we saw on Thursday. I think it's just going to run out of steam and then subsequently fall over. The initial resistance comes in around, you'd say around the 105.50 mark. That is the reaction high that we've got around this, and it was sort of like an intraday low. I mean, 105.60 to 105.50 to 60, you would argue, on Friday was a bit of a support, but that is now becoming resistance. And so you could well see a bit of well, it certainly seems in the last few hours that this rally has sort of not really got going. A few pretty weak candles. No decisive move once the European traders came in. So obviously it doesn't look like the Europeans are going to be backing this bull run this morning. And maybe it'll be data driven in the afternoon. You've got capacity utilisation and industrial production at 1:15, so maybe they're waiting for that. But it certainly looks, I think, as though that this is just going to be another chance to sell. That's what the momentum indicators on the hourly chart are certainly telling us. And I think at the moment that's the way I'd be backing this, as a renewed downside. Now, in terms of resistance levels, you wouldn't really get excited too much in terms of a rally until you saw, well, certainly I think the rebound high around that 107 mark would be something that I'd certainly need to get taken out. And ultimately, I think on a near to medium term basis, you'd be looking out for this 108.20 resistance as well. But at the moment, I'd say that this is just again another chance to sell. Anyway, I wish you good luck in your trading today, and I will speak to you later. Thank you.